moving on to Jacob's question. He says, how do I choose an online high yield savings account? And I think this is a good question because they're back up. You can actually make some money in a high yield savings account. So he says there are so many bad reviews on how account owners cannot get their money back or various things like that. I am tempted to use a money market mutual fund instead. What do you think about this idea? And then how do you choose a high yield savings account?
This is a great question and very timely. I'm glad Jacob asked it because Bo's not here to defend himself, so I can pick on him. You have to be careful because the easy solution on these because look, first compare your traditional brick and mortar to your online savings accounts, and you're like, this is almost criminal. Why do our traditional banks not give us money for cash? And the reason is because the stats show once you open up a bank account, historically, you keep that account open for 16 years. So the banks know that it's a lot of headache to open an account, that you're not going to switch accounts very quickly. So the brick and mortars underpay you, basically give you pennies on the dollar of what they should. Meanwhile, the online banks gamify the system. And what do I mean by gamifying the system is that you will see, if you go to bankrate.com and look at their list of top online savings accounts, a lot of those top of the list ones, you're not going to recognize the names. But they're going to be the tippity top. But you have to be careful of this reindeer game that they do, is that banks will set up so they can get the top tier, look like, on the top of that bank rate list, because they know a lot of people will go out there to see what is the most paid. But then they'll only keep that teaser rate for a few months. And then slowly they will take the interest rate within that account below market. I'll never forget, because there was a company back in the day, and might still be around, but it was Immigrant Direct. They were kind of one of the leaders in online savings accounts. Don't just run out for them yet. We'll hear the rest of the story. But they started spinning off kind of like satellite companies, still under the Immigrant Direct Bank. But I think there was like Dollar Savings or something. Bo jumped in on one of these to get the teaser rate. And then I got to watch as he was frustrated that they started dropping the rates into where it was underperforming. By the way, it's not just these banks that you've never heard of. I have just worked on Capital One. I hope you're paying attention, because I don't mind naming you by name. And the fact, because I told the customer service rep, this is ridiculous. And the fact that I had one of y'all know I'm very transparent on who I've worked with. I don't get any referral fees or anything. I just share with what I got going on. Capital One, because these credit card companies have sometimes been some of the better paying online savings banks. They're FDIC insured. So I had Capital One as one of mine. But here's what I don't like. I found out, because I was complaining to somebody that they were only paying, still like 0.85 or maybe a little over 1%. They're like, no, Capital One's paying well over 3%. And I looked, I was like, no. And I went and looked. They had done the same thing I just said, is they had opened up a new product line. And then anybody who was on their old product line, they've started dropping, they didn't raise the rates to keep up with the marketplace, and all the new dollars are going into the new one. So I called the customer service and I said, hey, why is my money not in the default one? Why can't you just convert me to that one? No, we can't, sir. We can't. I mean, I guess you could actually, you manually could pull that money out, and I could open it up, and I was like, why is this not automatic? It's because they're playing reindeer games. So be careful. I would go with companies that seem to be always top tier. If you want to know, now look, I get nothing for this. This is just me sharing some just hanging around. These are not recommendations. Just do your own due diligence. But it seems like Ally, which is the old GMAC financing arm that rebranded as Ally after the Great Recession, they always seem like they're top of the list. I know another one is like Marcus, which is part of Goldman Sachs. They always seem like they're top of the list. I used to say always look at the credit card companies, the Discovers, the Amexes, the Capital Ones, but be careful based upon what I've seen Capital One doing recently. That's kind of troubling that they're playing these reindeer games. I hope they hear this and be like, maybe we're losing some goodwill from our audience. But here's one final thing, because I don't mean to go on a sidebar too long, but I'm just trying to educate you guys because this is an important topic with cash. Your online banking that is FDIC insured, those are great, but they're probably going to be less than your brokerage accounts, because Jacob had mentioned that he was considering looking at some of the online money markets. I want to give you guys a very quick education. Right now, it is true. The brokerage accounts and their money markets are going to be the higher interest rate. A lot of those are paying close to 4.5% right now. I know that will get dated depending on what happens with interest rates, but realize those are not FDIC insured. They are very, they haven't, you don't see people break the buck. So they are very safe. I have a lot of money in these money markets too, but you do need to know, if the Fed drops interest rates just like they raise interest rates, the first thing that will be impacted by that is your online money markets. Your brokerage account money markets will drop faster than your head can spin to keep up with what's going on in the market. Your online banks will probably be much more of a slow drop, just like they've been a slow rise as the Fed has raised rates, is because those FDIC online banks, they're going to be more consistent. So make sure you understand the behaviors of both of those two different products. They're both very safe. One's FDIC insured. The other one is, more of, just safe by what they're buying, treasuries and other things within them. Make sure you're paying attention to what the portfolio is designed with. But do understand those online banks, you probably want to have a relationship with both, because I like having an online bank that I can attach to my normal traditional bank, and I just transfer the money back and forth. That's my very safe FDIC money. And then I keep all my opportunity money that's above and beyond emergency reserves and stuff, I keep in the brokerage account to get that much higher yield.